Hello traders, today is going to be the third video of LRA analysis. I haven't done an LRA video in quite some time, and if you don't know what I'm talking about when I say LRA, I'd highly recommend you go check out the two links of my previous videos, and then you'll be caught up to speed. Today's video, we're going to be talking about imbalances and how price reacts to those imbalances. It'll all make sense soon. Let's go in. When you're trading anything, I don't care if you're long, short, or thinking about trading an asset, you need to be able to discern whether any price move beyond the range is a price breakout, which will continue to a trend, or whether that price move is just a stop loss hunt, a failed breakout that removes back to range. If you can't tell the difference between these two, you will probably not be making money. But if you can tell the difference when a lot of traders are being trapped and a price move is beginning versus not much happening and a price move just a stop loss hunt, well then you'll see results. All right, so with this video, I want you guys to first pause the video and just read a bit of the notes that I had written on the far right. And after you read that, you can unpause and I will show you what this all means. Okay, assuming at this point you had just read this little like white text that I'd written to help you guys out. Tom Lexkey in LRA, which I've read 30-something times, talks a lot about range imbalances. What a range imbalance is when price is cycling from high to low on low volatility, typically, and you begin to see that retail traders are either being trapped in shorts or being trapped in longs. Now, when enough of them are trapped, price will move against them, okay? Now, the signs of a weak imbalance and what that means. Well, this range is the classic structure of weak imbalance. What ends up happening here, guys, is we go high, we have a low, we have high to low, high to low, high. And we don't have that much volume really being traded at all here. And second, we have declining open interest. What this means is that there aren't that many new positions in here and there aren't that many trades occurring. That's a sign of really a weak imbalance. The final thing that happens that's a very, very strong sign that this is overall just a weak imbalance is, and this is the most probably important part of the video, watch what happens when price moves below the range. Oh, I just revealed something. Watch what happens when price moves below the range. We see that there's not much volume, right? Weak volume spike on price breakout, and really open interest just slightly declines. This is a stop loss hunt. Why is it a stop loss hunt? Well, if this was a genuine trapping move because there were so many trapped longs here, then I would see a large volume spike, a large move lower, and an inability for price to move higher enough to let these guys out of their positions at break even, right? But that doesn't happen. This is just a weak move fueled by weak volume, and price goes right back up. Okay? Now, you already know what happens here because of a little mishap I had, but look at this. Price is cycling from low to high, we can see that here, right? But open interest is increasing by hundreds of thousands of link. At least 100,000 link is increasing here. So there's a lot of new positions coming in. We also see a lot of volume being traded. So clearly there's a lot of volume activity, a lot of trading activity, and either longs are being trapped or shorts are being trapped here. Now in this situation, I don't have that many trapped traders because most of them are exiting and there's not much volume. But here we're beginning to see that there's either a fair amount of longs or a fair amount of shorts entering, right? Now, what we see happen in here, this is a strong imbalance. It fits all the parameters. Watch this price move above. Look at that. That's a volume spike. So price moves in high volatility on high volume, and this is the beginning of a short-term uptrend. This, strangely enough, is really not a terrible time to buy. I know that sounds weird, but if you really think about it, layering buys around here, this just makes sense because all of these shorts are now trapped. Now, you may say, well, how do you know that all these shorts are trapped? Well, look at open interest. Open interest just doesn't really decrease much. This is clearly indicating to me that there are still plenty of shorts trapped in here. This was a strong imbalance, and this high volume move is a sign that price will continue to rise. And price does, right? And watch as price just carefully does not let anyone who has shorted here exit for quite some time until they're all killed. You can see, look at price. Yeah. It is not wanting any of these shorts to exit. The lowest that price could actually even manage to go isn't even on the border of this range. And the reason that occurs is because we had so many trapped shorts here. Now, at this point in the video, you might be saying, well, okay, I understand weak imbalance and I understand strong imbalance in a range. The market maker is going to accumulate enough positions that are eventually going to be profitable, whereas retail traders are taking the wrong side. Retail traders get burnt and trapped. But how do you know which way price is going to go? Well, you don't always, but a very good sign is volume beyond the range. This is a high volume, high volatility move, which led to clearly an uptrend. Whereas the other move that I showed you guys before is low volume, low volatility, and this led to nothing. Okay, so my answer isn't great for you, but I would say if you're discerning between a stop loss hunt or the beginning of a trend, what I'd focus on is A, is there a stronger weak imbalance in the range? B, how much volume and what happened to open interest when price moved beyond the range? Because that will tell you whether or not price will just, trade back down to the range. This is just a fake move, false breakout, or whether price will just continue going higher. And here, price continue going higher. Okay? I just realized that I misspelled weak. I said WEC. WEC imbalance tends to lead to a stop loss hunt. But it's true. Weak imbalances tend to lead to a stop loss hunt. Another thing that happened that's so interesting to me, open interest is rising. There are a lot of positions being accumulated here, and we see this just sneaky little move here that's not high volume. If it was high volume, I'd be reasonably confident the price would keep going lower. It's not that high volume, but open interest just kind of decreases around here, and that's just a sign that, price goes right back to range. You may say, well, wait, Bennett, this is a strong imbalance. Shouldn't any price move beyond the range just be a trapping move in the beginning of a downtrend or beginning of a trend? Well, yes, but there's no volume on this move. This would have to go a lot further down and would have to have a lot more volume for this to be known as a trapping move that traps everyone in here. Okay, so eventually price actually does come back down to this range. I will show you guys that, but it's not. It's after price goes up like 5.7% or 6%, which means that anyone who had taken, I think, over like anyone over like 6-7x leverage is dead. They're liquidated. If you had used 20x leverage here, you would have been liquidated by now, right? So what we see is actually price does come back down, but price doesn't even have an easy time coming down to here. It takes multiple attempts. And that's because we have such a large, strong imbalance here that it will be profitable for the market maker to quote prices that are above this range. And it would also mean that for you and I, it's better for us to trade against these guys, meaning buy whenever price tries to get close to the range. So we can see that some of them get out here. I know that because open interest decreases when price goes down to here. This is probably some trap shorts who actually survived it, leaving, getting out at break even, and then eventually, after enough shorts get out at break even, price goes down. So that these guys who would have made money if price had been here, they already got out here because so many of them were trapped and just didn't want to risk price going back into a losing position. So that is really, and then look at that. Price goes right back down. This is really what you need to be on the lookout for, okay? Another beautiful sign of a trapping move actually happened up here. Do you guys see this? Large open interest increase when price is doing this. Look at that. Open interest this is all over the place increasing. It increases here, it increases over here. This is a strong imbalance because we see OI increasing. We have so much volume, more volume than I've seen in a little bit of time on Link. So we have a lot of volume and a lot of open interest increasing, and this traps all the traders here. Finally, we actually see that the trapping move, which is the move beyond the LR, beyond the range that traps all the positions up here, is actually high volume too. All right, this is a great sign to short and to bet against these guys now, right? And if you had shorted there, you really never would have been in a loss. So, and price does not let these guys get out. So price has to first burn these people, which it does, and then it has to burn these people, which it does. Okay? All right, here's a new one. Here's a fresh guy. Let's go take a look. SWP on FTX. Previous guy was OKEX. Now we're looking at FTX, open interest. What do we see here? Well, what I see is a massive open interest increase as price is in this range, right? So if I was to illustrate this for you guys, really from here to here, I'm just seeing, let's go a bit higher. From here to here, I'm just seeing a fair amount of open interest increasing. I'm seeing a lot of volume, and this is probably going to be a trapping move where price begins an uptrend. And it does. The reason I say that, oh my God, what a beautiful uptrend that is it has all the signs of a strong imbalance. There are many shorts who are trapped here, right? I can see volume spikes where a lot of people probably shorted. Right there, it's a red volume spike. A lot of people probably shorted that bottom. A lot of people probably shorted there. A lot of people may have shorted around here. And we have trapped the shorts. And now on the move beyond the range, it's high volume. And it's high volume because it's just accelerating higher so that the shorts can't get out of their positions. I mean, as gruesome as it is, these guys are just going to be massacred. And even better, this high volume move barely decreases open interest. Now, if I saw that the same scenario was happening, everything the same, but open interest just tanks on this move, that's not a great sign for the trend, is it? Because that's a sign that a lot of those shorts who have been trapped here aren't trapped anymore. They're not trapped anymore because if price spikes on high volume and we see an open interest decrease, they could have been liquidated, stopped out, exited at a loss, or, yeah, basically those, which is a sign that price could just consolidate or just fall back to range. But that didn't happen here. We have barely an OI decrease, which is bizarre because price went up 2%. I have a theory for this, and it's even more sinister. What probably happened is people short here, and then when price begins to go beyond, they say, oh, better prices to short. They short and they try to average in. And these new positions, these new shorts coming in, are being contrasted by the market maker in the HFT, who are likely entering long positions at this point because they're the smarter money, and that's why open interest may have increased actually on this move. And price just keeps going up in a beautiful fashion. Now, let's go look at if we can discern any more ranges. So I'm waiting for low volatility. Come on, give me something here. Yeah, so guys, what I'm seeing here is this is looking more like a weak imbalance, which means that I'm expecting some stop loss ons. I'm expecting some moves to the upside that come right back down, some moves to the downside that come right back up, until I can see more volume and open interest. So let's just look at what's going on here, okay? There you go, right there. That's a stop loss hunt. We go right above this high. Open interest doesn't really care. That is a beauty. I don't know. This is beautiful, so beautiful. We can see that there's an LR here, and this is what I was talking about if you want to rewind 30 seconds. We see an LR here in the price move beyond the LR. First of all, it's not high volume in the slightest. There's no volume on this move. Second of all, open interest doesn't really do anything at all. And third of all, this is a weak imbalance. There aren't enough trapped traders in this range for price to profitably enter into a trend. Because for a trend to begin, according to Tom Lexky and LRA, for a trend to begin at from low volatility base of consolidation to a strong uptrend that goes higher, you need a ton of trap shorts to fuel liquidity as price goes higher, and they continue to short as price goes higher to try to average in. But what happens here is price goes right back down to the range because there just aren't enough trapped people. It's as simple as that. That's why this stop loss hunt occurs, and that is why it would be good to short here. Right? All right, let's keep looking. Literally nothing happened here. Now open interest begins to increase, finally, and now we get this move down here. Open interest is just tanking, though. Do you see this? Yeah. It's high volume, but open interest and tanking. So just continue consolidation. Yeah, that makes sense. If open interest was rising, this move would have probably continued. But open interest decreased, which meant that all the trap longs here probably just died here. So this is a nice range, though. It's very clean, and open interest is rising. So open interest rising means that there is beginning to become an imbalance of positions. Likely what this could mean, potentially, is that there are some trapped shorts. They're going to be hunted. And there you go. We're live. Price is up. So what ended up happening here, let's go discern what happened again, is we begin to see this range begins as a weak range, which means that any price move beyond is probably just going to be a stop loss hunt, which it was. This price move here looked to be kind of a stop loss hunt. Price went right back down to range. It's a false breakout. But then we begin to see right around here where we're still in range. Let me show you guys that. Where we're still in range here, look at this open interest. Boom, we go up. That open interest is going up because there's more people entering positions all of a sudden. And once those people enter positions, you have a strong imbalance in a range, which fuels a trend. Then watch what happens. Very sinisterly, price moves up on decent volume, I'd say mid-tier volume, and then price just is not able to go back into the range. Because there's an imbalance, there's many shorts that are trapped here, price can't go low enough to let these guys out of their positions. Additionally, a decent sign that there are trapped shorts here, look at these escalating highs. Anyone who shorted here, trapped. Anyone who shorted here, trapped, because price doesn't go back down to that low. Price doesn't go back down to this low. They're trapped here, they're trapped here, they're trapped here. Anyone who even shorted around here, trapped. So that's a sign that this move is genuine. Yeah. So that's going to be it for this video. We have covered 2 coins, SPX on FTX, a lot of acronyms, and we covered Link on OKEX. What I want you guys to take away is to look at these price ranges as not as boring, but as sources of data. Because what we're always trying to find, you and I are probably not market makers or high frequency 10 million HFTs, 10 million US dollar, HFT. We're not that. But what we can do is take advantage of the data and take advantage of other traders who are being exploited in this market. To do that, what we can find is look for spots of strong imbalances and then watch the price move beyond. If that price move beyond is just a very strong move that looks like a trapping move, then finding some way to enter within that move is probably good. And then price will probably continue in that direction. But if you see a weak imbalance, where open interest is just decreasing, there's just nothing happening. Like here, there's just nothing really happening. Open interest is decreasing. There's not much volume either here. Any price move above highs or below lows probably aren't genuine. They're probably just not going to work because there aren't enough positions at a loss for price to begin a trend. What we need to see is before any strong trend, you need to have a lot of positions losing money. It's like this. Open interest increasing, trapping the shorts at lows. That's the kind of sign that you want to look for entering along. And I believe that if you're not trying to do some kind of exploitative analysis, then you're probably going to be losing money in the market, or probably already have lost money in the market. That's why I push LRA so much, and I think it's such a good theory, because the theory is predicated upon the losses of others, which I think is one of the better ways to trade. And this is a beauty right here, my God. Open interest increasing, fair amount of volume, trapping move, great place to long on any pullback. All right, guys, that's going to be it for this video. Of course, none of this is like direct financial advice. Please, whenever you're using a new strategy, I'd say try to use it with low capital, whatever low capital means to you, because we don't want to just dive into new strategies with a lot of money. That's typically not going to end well. But I want you guys to understand imbalances, look for strong imbalances and weak imbalances within ranges and consolidation, and begin to predict whether a trapping move will occur with strong trend that begins the trend, or whether it's just a stop loss on. And hopefully this video will help you with that. With that, happy trading, and I'll see you in the next one.